So now the product landscape in India, especially in mutual funds, has changed, if I could say, drastically over the last few years. We've got multi-assets, we've got, FOFs, we have now even the SIF framework that has come in. The regulator also has been very active in trying to, bring in new spaces for, investors, to offer investors the opportunity. And the AMCs have been playing a very important role in, taking it forward. Now, what is really interesting, this is also the time when our investor base has also changed. We have, investors who are now doing a lot of DIY, and they're also asking a lot of why questions. They're not just investing, in the few funds that were available. And today we have a, wonderful panel of, CEOs who are going to talk about, how they are looking at the changing, product space that is there and how it's impacting portfolios. So perhaps maybe we'll start with Gopal sir, and if you could perhaps talk about, from where you sit, where have you seen the single biggest shift in how investors are approaching portfolio management right now?
I think over the years, the customers have changed their behavior. I think largely because multiple reasons. One is that, which is the recent one, is that how social media is shaping the people in terms of the behavior.
So if you just the mic again.
Is it okay now? Yeah. The social media is actually changing quickly the behaviors. Second is also that financial products is also getting into maturity level. So if you look at the most developed country like US, you have so much of options to invest, just not on active funds. We have passives, we have private assets, the multiple opportunity to grow. And you also seen that people who came to investing in this country 25 years back when they started putting money on markets today, they also got matured. And they also have now an opportunity to think about saying that, can I get better products? Can I get a product which matches my risk profile? Can I get a better asset allocation? These are the challenges. The last panel also spoke about number of schemes what an AMC brings in.
Yes.
One of the reasons which I think about is that it is also derived from the demand coming from the customers.
Right.
And our job as an asset management company is to produce products, and the distributors like them, they suggest customers based on the asset allocation. Our idea is to develop as much products as possible so that they can advise properly and do a better asset allocation. So there are multiple factors why the behaviors have changed, just not the social media.
Sure. Vishal, if you'd like to chip in for the same.
Thanks. I hope I'm audible. Okay. So I think the conversation has shifted. And if I trace back clearly the last few years and the volatility in the market over the last 2 years may have been one of the factors that have allowed this shift to be more accelerated in a sense. So from a traditional view of saying India equities, India fixed income, now you've discovered international equities. And the shape of shift, if I were to try and summarize, so from saying which fund, more people are now asking about what's the allocation in the fund. That's the next level of questioning, right? Or rather than just looking at return, what's the risk-adjusted return? So that's the change in vocabulary that we are seeing. Or just looking at, okay, should I add one more fund? People are asking, am I truly diversifying by adding a different source of return? So there is a significant shift. Now, as managers, in one sense, we are just manufacturing to a more diverse toolkit that is available. So I think kudos to the regulator to allow us to do a bit more.
Hey.
Because clearly if the customer need is shifted, given what we've seen in the markets, because of volatility, because of the range of products now available, I think through SIs, through Gift City, through international investing, etc., and just the plain vanilla multi-asset fund, BAF, etc., there are enough strategies that can be done in traditional funds as well. So let's not keep it outside. I think it's about providing a stronger continuum for investor, which is a great development, I would think.
Sure, thank you. So Sajid, perhaps, obviously the way, portfolios were managed were very different earlier than what they're today. So if you were to, have an ideal portfolio right now, how would you like to start investing? What would be the ideal mutual fund product mix that you think would have been the ideal product mix?
For myself?
For yourself or for, in general, where should people have started? Like we used to do earlier, like a mid-cap and a flexi-cap, the very core products, but now it's different.
I think what's happened is discussions happen galore But the focus of an investor remains absolutely intact. The investor, and that is 80% of industry flows, focuses on last 1 year return.
Yeah.
Discussions can happen. And that's where we are losing the plot. Today, mark my words, if at Mirae Asset we put up 1 year glorious performance, we can ask the sales team to sit at home. And all of you will do the job of getting the money. That is how skewed it has become. And this 1 year focus is the hindrance to portfolio creation, is an incredible hindrance to asset allocation. And that's what is plaguing the industry now. If you're going to go to from 4% to 8% penetration, we are the only country in the world which invests in market cap products. Only country. Nobody talks about large cap, mid cap, small cap anywhere. The world is investing in 12 stocks. Korea is investing in 3 stocks. Taiwan is buying 1 stock. That is where investors have gone. Today, if you look at the diversified fund for performing has to necessarily allocate in a small part of the country, part of the market. Whether it's PSU, defense, international, now healthcare, tomorrow IT. The investor will soon know that allocating there will make money, and that is where the cookie will come. I hope the cookie crumbles sooner than later, and that is what will expand the market. If I were to build my portfolio today, and which I am building, I don't want to share my portfolio, but my portfolio has had a fair share of a brilliant small cap fund from Bandhan. It has had some good products apart from Mirae. But what really built wealth for me in the last 1-2 years has been my allocation to silver, my allocation to a manufacturing index, my over allocation to healthcare. That's what has given me the alpha. So today, 60-70% of my portfolio will go to thematic investing, and probably 30-40% to a Nifty 500, and no longer in Nifty 50 is the way I look at products. So we are building products, but this focus of 1 year return is really being a big hindrance to the industry.
Sure. Six, if you would also kind of chip in on this, how would you be building your portfolio?
Just to tell you background that I am like a 95% equity investor for multiple years. So go back like from the time Swaroop and myself, and I just talking to Vishal, we are from the same place, eastern part of India, we are from Calcutta. Swaroop and myself worked in the same industry, same place for about now 27-28 years, right? So same kind of traits we have. Let me tell you the problem with this, we understand risk. And if I am telling you I'm 95% equity, it basically means even if market is 50% down, and this happened in 2008, I bought a house when I came to Mumbai, I bought a house in Mumbai. So market was down 45% or so. So I take equity as a current account if required. That if it's down 45%, if I need money, I'll take it. If it's up 100%, if I need money, I'll take it. The problem was that I also have an MFD advisor. And our problem is that if you use the word advisor, it is taken negatively. But I also have an advisor who made sure that my allocation comes down. But call it luck, call it vision. I think last 7-8 years has been very kind to us because I've been about 60% mid-cap. It is only last 2 years that I started increasing my allocation to small cap. I was 0 small cap. But my call was very simply, liquidity is not there and mid-cap is like small cap. So he talked about silver. So I'm a gold investor. And when I talk about gold, I'm talking about when gold was 30,000 rupees and so on. And my call was, shouldn't be talking about this, but call was, you go multiple times up. So the thing is, if you are investing before time, you may need to have patience. There's a frustration premium which will get paid up later. So today, mid-cap allocation all remain, but incrementally it's towards small cap. So I'm just keeping it simple, and some bits of it also going to some thematic, as he's talked about. But my vision is about next 5-7 years, because last 2 years, if we have not made or made little money, then we are going into a zone where we will make the alpha for the sacrifices that we have done. In the same conversation, I tell my if I'm talking to some advisor, I'm talking to MFD, that what you have sacrificed last 2-3 years will be paid up in the coming time. Naturally, I'm backing it with growth. I'm backing it with some other economic angles. So equity and bits or pieces, I think it's more to do with small cap and mid cap and thematics.